India's MSMEs, some 63 millions of them, located in every nook and corner of the country, are in a turbulent phase due to ongoing geopolitical disruptions. From Agra's leather manufacturing hub to Tripur and Panipat's textile cluster, each MSME hub is facing rising raw material costs and supply chain pressures. To unpack what this means for the sector, we have with us Mr. Sachin Gupta, Chief Ratings Officer at Cottage. Thank you, Mr. Gupta, for speaking to us today.
Thanks, Shariq. It's my pleasure to be here. Thanks for inviting me.
Thank you. So, Mr. Gupta, we are seeing geopolitical shifts across multiple fronts, from West Asia tensions to supply chain realignments, and even some China plus one movements. In your view, how is this uncertainty impacting MSMEs on the ground?
It is actually one of the most uncertain times that we have seen in near past. And in fact, I would say for last 15, 20 years, if you see events which have affected industries, across a wide range, is pretty much that we are seeing now. Whether it's the macroeconomy, the large corporates, mid corporates, all of them are getting impacted. And why it looks so stark is that, till about 2 months back, after the Trump tariff problem was kind of solved, it seemed like we are in a very good phase. That is around early to mid Feb, and that is when this thing happened in end of Feb, that this unexpected war kind of started. And just to before I get into the MSMEs, I think it's important to see where our macroeconomic situation is because of this. Because of this sharp disruption on account of the West Asian crisis, the biggest challenge that we are seeing is in terms of lack of availability of the crude oil and the gas. And obviously, even if they are available at a high price. The crude price has gone up now. As we speak today, it's about $110. The gas supply has been severely restricted, and that has its own downstream impact. If I look at the macroeconomic situation, while earlier last year, if you see our inflation was ballpark around 2%. Now we're expecting the inflation, even if the war were to stop, say in a month or so, it will be at least 4 to 5%. Similarly, our current account deficit, which was about 1% last year, it will be more than 2%. The fiscal deficit again will be higher on the similar order. The interest rates, which the 10-year interest rate earlier were about 6.7, 6.8%, now they're already crossed the 7% ballpark. Even the growth, if you see last year at an overall level, we had a growth of about 7.6% as per the second advance estimates for FY26. And for FY27, because of this whole geopolitical thing, we are now expecting it to be significantly lower than 7%, maybe 6.5 to 6.7%. So the large point that I'm trying to make is that while yes, this impact has been there on MSMEs, but it's actually all pervasive. The impact on the government finances, the impact on large corporates, the impact on mid corporates is pretty much there. The real question is how long this will last. Obviously, if it kind of ends in the next few weeks, because the real war is actually now no longer there. It's more of a embargo on the movement on Strait of Hormuz. But then that is what was causing the challenge for us, and that continues. So if I were to look at impact on MSMEs, we have to look at it at 2 or 3 levels. The first level is the most direct impact on MSMEs. So MSMEs which were, say, using natural gas or crude oil as their raw material, they are facing challenges because of high prices and low availability. So that's the most clear impact. Then there could be second order impacts where because of the increasing prices, say things like packaging, things like supply chain disruptions, wherein say just to give an example, say rice exporters who are exporting to say Gulf or Iran, they have to wait there because their ships are not letting in. So per se, it is not an import restriction which is there in case of crude, but in terms of logistics and supply chain, which is causing a big challenge. So it is fair to say that the impact on MSMEs also, because they are lower down the value chain, the impact will be more felt in those entities as compared to the larger corporations who have certainly better financial flexibility and other means to manage and all that. So overall, it's a tough situation that we find. Overall, corporate India, macro India, and also the MSMEs in terms of their financial position.
Right, right. So clearly, the ripple effects are being felt at multiple levels.
Correct.
In your view, which sectors within MSME, specific sectors, are feeling the biggest impact? Which labor-intensive sectors are feeling the
Correct.
big?
So, it is both labor intensive and non-labor intensive. I think if I were to start with the labor intensive sectors, what you mentioned early on, in terms of textile, some bit of that could be impacted. But the impact, I would say the most direct impact is more on sectors which are using the raw material of natural gas. The most important being, say, ceramics. There's a whole cluster of Morbi in Gujarat, wherein the countries. It's one of the world's largest ceramic tile manufacturing hub. And for them, the gas is their primary source of energy. And now because of gas being, the entire cluster was actually pretty much shut down for almost 2 to 4 weeks because of lack of availability of gas. Now I am told that, there have been alternate arrangements made, and then they are kind of coming back to starting their production in a serious way. But that is something ceramic. Similarly, glass sector. Glass sector manufacturing also uses gas, so they have been impacted. Thirdly, all the crude oil derivative chemicals and plastics, those are also segments. So while the availability, I don't think has been restricted, but the prices have gone up because all the raw material prices there are dependent on the starting with the crude price. And if the crude price has gone up, accordingly, the impact on these plastic industry, as I said, or crude derivative chemicals, that has been impacted. Then I mentioned about rice exporters. Rice exporters, because almost two-thirds of our exports of rice are to the Gulf region. And because there were logistic challenges in terms of being able to transport, a lot of ship containers were, waiting for them to be unloaded into those geographies in which they could not. So that has been other impacted sector. Apart from that, if you see, so this is one in terms of the specific sectors. But then the second order impact is that most of the other input materials, like say metals, a lot of SMEs would be using metals like steel or aluminum in their manufacturing processes. So those, if you see the entire metal basket, the prices have gone up. So which is increasing their cost of production, and therefore their profit margins are certainly going to come under pressure. So while if you see 25, 26 for SMEs, and especially say leather and textile and shrimp, those were impacted by the tariffs. That was a big impact that they had. And as we know, a lot of these textile manufacturing hubs, they faced a lot of heat because of, they missed out on the entire export cycle to US because we were under 50% tariffs, and some other competing geographies were at 15, 20% tariffs. So we lost out in that. Hopefully this year we will be able to recover those lost grounds. But the fact is that SMEs in some ways have been under pressure earlier on account of Trump tariffs, and now on account of this West Asian crisis.
Stakeholders in chemical sector and plastic sector, they also say that they are having issues securing raw material, especially chemicals and all that. What is your reading of that situation in those sectors?
No, you are right. We are also, many of our clients, they are facing challenge. The good thing I would say is, apart from gas, where the availability is an issue. So the SMEs which are dependent on gas as the energy source, they are having more direct impact. But in other cases, like you mentioned, plastics and other chemicals, their availability is there, but the prices have gone up. So, it will depend on how they are able to pass on the prices further to their consumers. And that is where SME versus a large corporate somewhere comes into handy, that these MSMEs and SMEs, they necessarily may not have contracts which allow them to pass on the input price hikes completely to their consumers. Their consumers mostly are large corporations. So if they are not able to pass on those cost hikes, which are crude linked inputs, then they would be facing challenges. And therefore, as what you said, in plastics and chemicals, our clients are also facing significant challenges.
Perfect. That's insightful, Mr. Gupta. Clearly, some sectors seem more exposed than others. So, in your view, are you seeing more risks or more opportunities for Indian MSMEs right now?
So that's an interesting question, Sharik. So right now, the way I've been answering your questions, it may seem that, it's quite a doomsday, because we are clearly
Yeah.
seeing impact on the profitability of many of these MSMEs, and which is not yet visible because the war just started in February, right? So the March quarter would not have been as impacted because, generally people have inventories, low cost inventories, which would have allowed them to manage their production till the end of the last year, or the Jan to March quarter. And in this current quarter, the results obviously will come out only in May or something. So then, rather July or something. That's when we will see the reported numbers. But we are quite sure that the impact on profitability will be there, and therefore my views are a little pessimistic on that count. However, if we kind of zoom out and we look at a little more long-term this thing, there have been significant positives also for the MSME sector, especially if they have to look at export markets. Now, just to give some background, today also Indian MSMEs account for roughly one third, or I think 30 to 35% of the Indian GDP, which means they're very, very kind of relevant and material to the overall corporate world and to the Indian economy. Also, the exports, they account for about 46% of Indian exports, right? So any improvement in the exports will help the MSMEs, because either they are directly exporting or they are somewhere, the smaller MSMEs are contributing to larger companies, which are in turn exporting. So that is there. Now, if you see in terms of positives, and as I said, if we zoom out a little bit, there are a few developments which, I mentioned about the tariffs, Trump tariffs, they having come down. So at least to that extent, exports to US, at least we're not at a disadvantage. While 18% of tariff is still, higher than whatever we had earlier. It used to be 0 to 3% kind of tariffs. Now most of the products are in 18% kind of bracket. So that will have an impact. But it is still better because we are competitive with other economies, like say a Vietnam or a Thailand or a Bangladesh. So to that extent, we will be able to compete in the US market. So that is point number one. Second point, which is yet to play out, is the FTAs that we have signed. So if you see in this whole scramble for re imagining your supply chains, most of the large economies are looking at de-risking themselves from US. And in that respect, we have signed FTA. So most important for us have been the EU FTA, the European Union, and the UK FTA, and then smaller ones like New Zealand, etc., have also been signed. So there, we are hopeful that we will be able to get some market share of the exports into those countries, and Indian MSMEs will have the opportunity to kind of monetize some of those opportunities. That is the point number two. Third point is again a bit more long drawn, is that the Indian government has been clearly focusing on increasing this whole make in India, and focusing on manufacturing, and with incentives on under the Atmanirbharta scheme, things like PLI schemes, etc. So they are certainly going to help the Indian MSMEs to be able to invest and then have some incentives linked to production, which will allow them to compete in the global markets. So in terms of opportunities,
Mhm.
as we said that there are, if we were to look zoom out, and
Yeah.
how we can are seeing some big opportunities for the Indian MSME players. One key thing is how the government has been assisting through the PLI scheme to
Mhm.
incentivize entities to be able to manufacture and then compete in the global market.
Mhm.
So, roughly about 1.6 to 1.9 lakh crore investment is already kind of planned
Mhm.
using these PLI schemes, and roughly about I think as per my numbers, 176 MSMEs are among the PLI beneficiaries, and the sectors which it includes are medical devices, white goods, pharma, bulk drugs, food processing, textiles, drones, etc. So these are some of these cutting edge sectors wherein India has a right to win because of the backward integration. We are seeing that the Indian MSMEs will be able to play a very very active role. And finally, in terms of what's working, especially from an export perspective, is
Mm.
I mean the fact that dollar, while it does impact the imports because the now dollar is roughly about 95 rupees. But for the exporters, the MSME exporters, the fact that dollar is now depreciated by more than 10% in the last 1 year allows them to be more competitive. So rupee has devaluated vis-a-vis other currencies to a very very large extent. And even for economies like euro, there the impact is even 15 to 20% depreciation. So the depreciation of rupee vis-a-vis these foreign currencies, that also allows the Indian MSMEs to export in a more competitive manner. So these are some of the positive opportunities that I see for Indian exporters, Indian MSME exporters.
Perfect, perfect. So, like that's an interesting balance between the caution and optimism. Uh, and from your standpoint, how are these high input and logistic costs are affecting small businesses? Have export orders or demand patterns changed in recent months? What are you observing?
So it's a very very disrupted kind of a scale right now. But whatever information that we get, as I mentioned earlier, wherever there is a crude derivative as a raw material, those costs have gone up. So that impacts the profitability of the SMEs quite directly. Energy costs have gone up. So energy cost. It could be any fuel that they were using. It could be a diesel, etc. While till now the government has been kind of soft or rather benevolent in terms of not passing on the impact of the high crude prices to retail and even for the businesses. But we believe that very soon that will be kind of it will translate into high cost of refined products, whether it's diesel or other energy sources. So that will have an impact on MSMEs.
Mm.
The thirdly, which not too many people realize, is the cost of packaging. The packaging costs have gone up because most of it uses propylene, which is clearly a crude derivative, and that per bag cost has gone up by 2 to 3 times. So that will again impact the profitability. And finally, the transportation cost. So transportation cost also will kind of go up as the diesel and other
Yeah.
fuel prices go up. So, in terms of margins, if you see, there will be clearly a pressure. The question is, to what extent will these MSMEs be able to pass on the increased cost in the form of higher prices to their consumers? And which generally, as I said earlier, are large corporations.
Mm.
So, if they are able to pass on, then I think the impact will be less. But our belief is that in the short term,
Yeah.
they will have to kind of bear the impact, and there will be a adverse impact on their profitability because of these increased costs.
And Mr. Gupta, in the initial days of this war, the LPG, this availability of
Correct.
LPG was a big issue. But I believe that the government has taken some step, and there has been
Correct.
some good news on that front. But now we
Correct.
again see that yesterday there was a news that Iran has again started attacking refineries in UAE. So with
Correct.
all these new latest development, do you see that LPG crisis do you see that again coming to hit
I think
Indian
this will,
MSMEs or other
yeah. So
energy inputs?
yeah, it's a very very volatile situation. As we see right now, both US and Iran have their respective blockades. None of them wants to nothing is going into Iran, nothing is going outside of the Gulf. So it is a very, very difficult situation to predict. But what I see is that the government, when the first LPG crisis happened, right, in the early days of this West Asian crisis, that was quite sudden. So the government did not have any time to prepare. But now I think the government, because when you get crude and then from there you produce various extracts, there is a flexibility which the refining companies have to produce more of gas versus other fuels. So to that extent, I think the Indian refining companies have increased the production of
Oh,
LPG. Plus, I think the alternate supply chains have also been explored. Plus, the government has a clear pecking order in terms of which components of the demand will be prioritized versus the others. So yes, the overall shortfall will be there, But to my mind, since LPG is what something that affects the the bottom of the pyramid, and they would not really want, while the elections may be over, but still I think the government will be trying their best to see that this LPG kind of crisis is minimized, which has improved. I mean, I think in the last few weeks we are seeing not as a tough a situation as it was earlier. So I don't foresee that those earlier days to be there. Also, the key thing is that when such shortages are there, there is a bit of hoarding which also starts happening. So even if a household needs only one cylinder, but if he's able to get two cylinders, he will keep that other cylinder also just in case. So that just in case kind of hoarding, which is kind of no ill intention, but everyone, if they want to have some buffer, then that leads to a market which the shortages get further exacerbated. So
Lots of our cottage industries and lagu udyog, based in our hinterlands, and they are
correct,
in need of
correct,
these LPGs and for their production and
correct,
all that. And
correct.
there have been a lot of news of corruption and holdings. And so,
Absolutely.
do you see that the government is taking steps to minimize these
I
uh,
think government's role
elements?
very clearly is to ensure, give confidence that there is enough supply available, and also back it up by giving wherever they see some shortages, taking immediate action to provide gas. Very very ground level corruption. Yes, the government should take action against that as well. But I think if they give confidence to the people that yes, enough gas is available, and they are able to actually see that availability themselves, then I think this crisis should not be further worsening.
On a macro front, so coming to that, we heard a lot about China plus one on the ground. So,
Correct.
in your assessment, are MSMEs actually capturing value from this shift, or is this benefit still limited to a larger player? What is your reading now?
Yeah, so a very interesting question. Actually, we've been hearing about China plus one for last 2 years. When there was a tariff war between China and US, and generally China was seen as a very, very belligerent kind of an economy, trying to take away all the trade away, and it becoming the factory powerhouse for the whole world. So there was this narrative. Honestly, if you ask me, we have not. I've also been writing in my articles that this is a big opportunity for India to capitalize on, and India is the best alternative for China in that sense. But we have not really seen a big positive coming through yet, and there are multiple reasons for that. One, uh, China also is facing a situation of very weak domestic demand. So they have been very aggressive in forcing their products into the international markets at very low prices. So while India may have, in places like India, we may kind of say stop importing from China, and we will want to develop our own industrial capability to develop, build, manufacture those products. But there are a lot of other economies, say in Africa or even Europe, they are not interested in manufacturing those things, say shoes or textiles or even chemicals or steel and all that. Then those people are happy because, or say the latest example is EVs. China is the biggest manufacturer of EVs, and they are kind of very, very aggressively exporting EVs to the whole world. So, if as long as those most of the geographies are happy with that because they are able to get cheaper substitute and they just buy it, and China is able to aggressively take even higher market share on many of these commodities. So while yes, there was an overall expectation and hope that Indian overall corporate industry, I'm not singling out MSMEs for that, because MSMEs grow when the large manufacturing, large businesses, large auto companies, they grow. So, but it's been quite limited in terms of any major weaning away of market share away from China and to us. But then, having said that, there are few segments, I would say electronics, mobile phones, solar energy, renewable energy kind of components, where there has been a clear focus of the government, and the corporates have also kind of built, backward integration and supply chains, both horizontal and vertical. So in that sense, some bit of China plus one is there, but I would say it's kind of still very very early days for us to really claim any victories on
Uh,
China plus one here.
Yeah, Mr. Gupta, especially I wanted to ask this question in the context of today's environment where we see global value chains being redrawn and Trump's tariffs, and they are just forcing countries to reshape their supply chain sourcing. So, do you think that these current times can be an enabler for MSMEs or a disabler for MSMEs in capturing those China plus one new opportunities?
Yeah, I think right now most of the economies, corporates are in the survival mode. Because the impact is so uncertain. We don't know when this war will end, whether it's a matter of few months or weeks or very, very long drawn. And in that backdrop, if I see, my conversations with the corporates and MSMEs, small and large, is they are in the survival mode. They just want to make sure that they have enough raw material to produce, they have enough energy sources, and they have their customers are, they are able to pass on some of the cost increases to them. Honestly, right now, I don't think people are really looking at capitalizing on China plus one because, as I said, it's more of a survival issue. But going forward, in the long run, if we see, I do believe that India will emerge as an alternative for China because that if you see the tariffs, China still has much higher tariffs now than what India is being given. So in that sense, if we have a 20-30 percentage point advantage over cost vis-a-vis China, which is what the difference in the tariff is, then there is a possibility that we may be able to win away some market share. But China is kind of fairly strong and kind of capable in terms of
Sure, sir.
defending
Sure,
its
sir.
market share. Yeah,
That's a crucial distinction between potential and actual gains.
correct, correct.
And now coming to the solution side, what kind of policy support is most urgently needed for MSMEs, which are now
Yeah.
grappling with multiple issues?
Yeah, so I think in some ways the government has been quite mindful of the challenges which are being faced by the MSMEs, and therefore, there was a scheme called Relief Scheme announced in March 26, very recently, just about a month and a half or so back. I mean, Relief stands for Resilience and Logistics Intervention for Export Facilities, and it is basically to support the Indian exporters who have been hit on account of the shipment disruptions on account of this conflict. And also, in addition, there was another scheme announced by GOI in April 26, which is very recently again, and where they have granted a full exemption of the export customs duty on 40 critical petrochemicals. As I mentioned early on, the petrochemical sector has been more impacted because their costs have gone up. So including products like methanol, toluene, etc. Till June 26. So the basically the expectation being that this war will kind of subside by then, and therefore they are so. But yes, I mean in some ways these are kind of a band-aid approaches because we don't know how structural this impact will be. But going forward, I think something that we believe the government can further do is if you remember, during the COVID times, the government had given some dispensation to the banking sector that they were, RBI allowed a debt moratorium on some manufacturing entities which were deeply impacted by the COVID issues. So something on those lines, basically extending more lines of credit because what happens is that while large corporations have multiple avenues to raise funds and they can survive such situations for a longer period, MSMEs for obvious reasons do not have that financial flexibility. So in that sense, the government, RBI, and the Indian banking system should kind of allow some bit of increased working capital. Also, some more benefits on duties and taxes because as their costs will go up, if their the duty structure can be tweaked so that they're at least they don't have to pay high duties on high cost already, which kind of will further impact their profitability. And yeah, so these are some of the things that I feel that the government can do. But I do believe government is mindful of the stress that the MSMEs are facing, and they are already in thinking in terms of what best
Absolutely.
can be done. Yeah,
Policy alignment will be key in shaping future
correct,
outcomes.
correct.
And finally, over the next 12-18 months, what will define success for MSMEs navigating this environment, in your view? What will be your concluding remarks?
Yeah, so honestly, it's very difficult to say because we don't even know the final shape of this impact. As I said, we don't know the war may stop tomorrow, it may not stop for next 3 months. We very difficult to predict. But what we have seen is in general, corporations, including MSMEs, who have been able to diversify their supply chain both on the input side, which is like where they are procuring their raw materials from, and also their markets. Because what we saw, a lot of these exporters who were completely dependent on US for their exports, and then suddenly when 50% tariffs were levied, they had significant challenge in finding. So then many of them wasted a full season, almost a year, to really find. So I think diversity is important both for the inputs and for their exports. Secondly, some of the MSMEs I see, they do not really manage their foreign currency risk very well. As we were discussing, the forex has kind of been very erratic. The dollar has moved up from mid 80s now to 95 rupees, or more than 10% depreciation. So that, since many of these MSMEs, if they are dealing in the export and they are also importing, if they are hedging their risk adequately, that will be important. Also, I think India, one key thing which we see, India, which it is kind of at one of the best levels in the world, is our whole digital automation and use of technology. So using more of technology, digital automation, AI, something which are the new technology, new opportunities which are coming through. So while that is something that if we use quite centrally into the manufacturing process or our sales process or our procurement process, that can allow the impact on their costs because their margins are under pressure. So using better technologies, AI, they can maybe hold on to their margins to some extent.
Perfect, sir. I believe this gives a very comprehensive view of where things stand and what lies ahead for MSMEs in the country. Thank you, Mr. Gupta, for sharing your insights with us. Thanks a lot for your
Great.
time.
Thanks, Sharik. I just want to end by saying that, while MSMEs are relatively weaker or smaller entities in the overall corporate system,
Yeah.
but they are very central to the overall economy. As I said earlier, roughly one third of the GDP and roughly half the exports are accounted for that. So we are the government is mindful, and we see that these actions will help them to, survive this difficult times
Yes,
for them.
yes, yes. I think so. Thanks a lot, sir, for your time.
Thank
Thank you.
you. Thank you. Thanks for your time. Thank you.
Thank
Bye bye.
you. Bye.